I'd like to introduce Sam Bazzini now, who's the CEO of Warpaint, and he will take you through a short presentation, and then I'll pick up at the back end.
Good afternoon. My name's Sam Bazzini, CEO and co-founder of Warpaint. Sitting in with me is Neil Rodall, our CFO, who will answer any financial questions at the end of this presentation. Warpaint produces affordable, high-quality, on-trend cosmetics, primarily under our W7 Technic and Body Collection brands. The group employs 113 staff worldwide. We have 45,000 square foot of warehouse and office space in either Buckinghamshire, as well as a further 100,000 square foot in Silsden, West Yorkshire. In addition to this, we have offices in New York, Hong Kong, and China. The offices in New York are used primarily for sales and distribution into what is the biggest cosmetic market in the world. And Hong Kong and China, the office is used for sourcing, quality control, and auditing our factories. We outsource all our manufacturing. This ensures competitive pricing, quick production, and good quality products. We produce multiple products in different factories. This way, we're not beholden to one particular factory. If we don't like the service, the quality, or the pricing we're getting, we can move if we're not happy. In 2020, we had total sales of 40.3 million. Unfortunately, this was down 18% due to it being a COVID year, but it wasn't all doom and gloom. Our lead brand W7 was up 8% in the UK. In 2000, the group is split into sort of three sections. We've got our group brands. In 2020, we did 32.8 million in sales. We then have white label. In 2020, we did 2.6 million pounds in sales. White label is where we make products for other companies. So for instance, we produce a lot of Asda cosmetic gifting at Christmas under their own label. And finally, we have what's called a closeout division, which is how this business started, did 4.9 million. And that is where we sell obsolete and excess stocks of other people's brands. And this is a business that is diminishing all the time. It's not really our focus. In 2020, we still made a profit. We were quite happy. We made an adjusted PBT of 2.3 million with an EBITDA of 4.3 million. We've got two brokers, Singer and Shore Capital, and they have guidance on us at the moment. 2021, they're anticipating revenues of 45 million with a PBT of 5 million and an EBITDA of 6.5 million. And we're very, very comfortable with these numbers. We're profitable, cash generative, with a robust balance sheet. We've got a strong cash balance. At the end of May, we had 6.2 million in the bank. We have no debt, and we are dividend paying. Next slide, please. This is a short history of Warpaint. In 1982, I started in this business by selling closeouts. I mentioned on the slide before. This is where we sell other people's obsolete stocks. I used to supply the market traders and the cash and carriers at those times. And on my travels, I met Ian McLeod, the other co-founder of Warpaint, and we started buying and selling various deals together. In 1992, we formalized our partnership. And in 1996, we bought our first warehouse in Ealing, West London. The postcode was W72QD, which is where the brand name for W7 comes from. At the bottom here, there's a timeline of various milestones. I'm not going to go through every one of them, but in 2015, we achieved sales of 17 million on the W7 brand, and in 2016, we listed on AIM. 2017, we acquired a company called Rectra in Silsden, West Yorkshire. They were very focused on gifting. They had owned the brands Technic and Body Collection. This was a market we wanted to get into, and they also had some of our target customers, and we felt this would help us accelerate our growth. In 2018, we acquired our distributor in the US that was distributing the W7 brand. We acquired them because they really weren't growing the brand. They were very, very focused on selling closeout, which is not our main goal. We paid $2 million for the business, $1.2 million they had in stock. So we paid $800,000 for the goodwill, and it was just a quick and easy way to get into the US market and have all the countries registered. 2019, we achieved sales of 49.3 million. And in 2020, we launched our W7 brand in Tesco, and in Wilko, we launched Technic and Body Collection brands. Next slide, please. Current trading, we've had a positive start, 2021. Despite the continuing lockdowns and having to deal with Brexit, the brands in the UK against 2020, which is 64% up, and even against 2019, a non-COVID year, our brands in the UK are 18% up. The only part of our business that's down at the moment is the closeout, and as I've said a couple of times, this really is not our focus anymore. The focus is all about the brands. Sales in Tesco and Wilko and some of our older customers, the Range and B&M, are performing very, very well. With Tesco and Wilko, we're getting more and more space. We've had significant Christmas orders, so they wouldn't be rolling us out into more and more stores if the brand wasn't performing. USA activities successfully restructured and refocused. We got into a store group called Five Below earlier in the year after a successful trial. They've got circa 1,200 stores across the US. And we've just had a recent successful trial with a fashion group called Francesca's. They have 444 stores in the US, and we're expecting further rollouts this year. E-commerce sales are accelerating in the UK and the USA. This time last year, we did about £150,000, something like that. We're now five times, have more sales on e-commerce this year. So we anticipate that we could do 1 to 1.5 million on our e-commerce, and we've just launched on Amazon in the EU. Next slide, please. This slide is really all about the post-COVID era and what retailers and consumers want and need. Retailers want everything. They want affordable, they want great quality, they want on-trend, sustainable and eco-friendly. They want all of this, and they want to maintain their margin. Our three main brands, W7, Technic and Body Collection, meet all of these needs. We don't box our products where possible, so this produces less packaging and less waste. We're removing all single use plastic from our gifting, as well as avoiding plastics on any of our products where we can use another medium. And we're looking to be paraben-free and vegan-friendly within the next 2 years. With regards to offering up low prices, we offer, when I sit with buyers, what we call EDLP, everyday low price. We won't pay gate fees, we don't offer discounts, and we don't do sell or return. We do pay for furniture, so if you look on the right-hand side, you'll see a stand that we have in Tesco. These are these lit-up stands you see when you go into various cosmetic shops. So we pay for that furniture. We do partake, they do various promotions, buy two and get the third free. We are involved in that, and we do pay for the stand to be maintained. A third party goes in and fully stocks it. But other than that, there's no hidden overheads, and this is how we're able to keep our price low. Consumer coming out of COVID, what do they want? Well, they're worried about their jobs. They're worried about paying the bills. All the research we've looked at tells us they're going to be looking for a bargain. A large number of them will trade down from prestige to mass market. However, they're still going to want good quality. We do produce very, very good quality products. We get exceptional feedback from our customers on social media. In addition, where we've scored in the last year and for the foreseeable future, there's been no testers on shelf. So you need people need to be able to pick something up cheaply and not worry about if they get it home. It's not exactly what they want. We also have found, sorry guys, I've lost my train of thought. For the last year, there've been no testers on shelf, and for the foreseeable future, there will be no testers going forward. All our products are color coded, so it's easy to see what the colors are without testing this. In addition to this, our products are so cheap, people are prepared to pick them up and take a chance. Sorry about that. Next slide. This slide sums up what we do. W7, our lead brand, is very often referred to as king of the dupes. We're not trendsetters, we're follower of fashions. And when new products come out, our MPD department immediately jump on the new innovation and the new products and try and replicate it and get it to market within 3 to 6 months. And if you look further, if you look down the page, I can explain what the dupes are. So in the right-hand corner, you'll see a product called Hood and Nude. This is a prestige eyeshadow palette that sells at £56. And if you look above it, there's our dupe, inspired by the Hood and Nude socialite that sells at £9.50. So it's 20% of the price. These dupes only represent about 30% of what we do, but it drives the whole business. It drives the whole buzz and interest of the business. And once people try the dupes and they like the quality, they move on to our more core range of products: a red lipstick, a black mascara, a nail polish, these type of things. And when I sit with buyers, I use this slide and samples to explain the brand, and they immediately get it. And the advantage of this type of model is once the product is on shelf, the consumer also immediately understands what the proposition is. Next slide, please. Strategy for future growth. We implemented this strategy 2 years ago. It's working well. Most of it is starting to come to fruition. In 2017, we acquired the business Rectra. As I said earlier, they were very much focused on gifting. And in the first 6 months of every year, they would lose about £500,000. So the first thing we did, we knew we needed to stop the rot. We got them to focus more on their all year round offering. And now I'm happy to report in the first 6 months of every year, we've turned that around and they make a small profit. The gifting business had far too many products. And they weren't focusing on any particular item. They would, besides our core range, they'd bring a gift set out. They'd call it lavender, and they'd make a lavender gift set for 2 years. We'd have to do all the formulations, all the registrations, the compliance, the artwork. And after 2 years, they'd say, we've had enough of that, and we'll go and do another brand called Sweet Pea. And the problem with this was we weren't recovering all the investment that we put into the product, and we weren't building any brand equity in these sort of here today, gone tomorrow items. So now we just focus on W7 Technic and Body Lotion. It reduces the amount of products we've got. We're not losing any sales. We're just taking the same money and growing with less products. And all this extra saving is dropping down to the bottom line and improving our margin and making us more profitable. Develop and nurture current business. What this is all about really is keeping hold of what we've got. There's no point growing the likes of Tesco and Wilko, pouring extra revenue into the top of the bucket if it's all leaking out of the bottom. So we need to look after the B&Ms, the Savers, the range, all these customers that we're supplying. And I'm happy to say we're doing that. I mean, 2018 and 2019 was very, very tough on the high street. This business grew up in the discount trade, and a lot of the independents and the smaller discount chains disappeared. And, we lost a lot of the tail, but we feel there's no more to lose. And the business is now growing. And as I said earlier, our lead brand W7 in 2020 against 2019 was 8% up in the UK. And to put that into perspective, cosmetics in 2020 in general were down 31%. So we really bucked the trend. The net grow market share in the UK, this is what I like to call our 75% strategy. As I said, our business grew up in the discount sector, but that only represents about 25% of the market. So it gives us another 75% to go at. In September 2020, we launched our Technic brand into 180 Wilko stores and our Body Collection brand into approximately 350 stores. In March last year, we launched into Tesco with a trial of 54 stores. We're now in over 1,300 doors and we've had significant Christmas orders. So obviously the brand is working, it's growing very, very well. And we're using all this information, obviously, to try and talk to other retailers. And we are in advanced talks with a number of large retailers in the UK. And we're hoping that we'll have something to announce in the near future. Develop online and e-commerce strategy. COVID forced us to accelerate our e-commerce strategy. In the UK, we've grown significantly, and we decided last year a quick way to launch in the US would be to use Amazon FBA, FBA meaning fulfilled by Amazon. So we launched in August. We just put the goods in there. We don't need any infrastructure, and Amazon do the rest. 60% of all searches for cosmetics in the US start on Amazon. So it makes complete sense for us to start there. And to give you an idea of the recognition the brand is getting in the US, when we launched in August last year, we had 18,000 views, or 18,000 searches on Amazon. We're now getting in excess of 500,000 searches every month. So the brand is gaining traction and recognition. With regard to the UK on our own website, we've got a loyalty program, a bit like a Tesco club card. People come on, they spend £10, they get 10 points, and it's redeemable off their next purchase. And we use Instagram, Facebook, TikTok, direct emails to drive sales to the website and to create interest in our brand. Grow market share in the USA and China. We acquired Leeds Marketing in 2018. The management were very, very focused on closeout. They weren't bothering with the brand. So at the end of 2019, we changed the management and we changed the whole focus of the business. Unfortunately, 2 months in to 2020, the COVID hit and everything had to be shelved. But in 2021, we started in America well. We've got an improved margin. We're not selling any closeout. We're much more focused on growing the group's brand. We've got a tighter range. We're holding less stock, and we've reduced our overhead significantly. And we're really turning the thing around. As far as China goes, China's always been very difficult for us. Every 18 months, we seem to pick up another distributor. It starts well, and then the goalposts get moved. So we've decided to take the bull by the horns and sort of replicate the Amazon model that we've used in the US. So we found a fulfillment house. We found somebody to do our customer services in China. And we will manufacture goods in China, register them and ship them straight to the fulfillment house. And we will sell them on the platforms in China. So Tmall, Taobao, these type of platforms. And we feel that we're much better off being masters of our own destiny. Organization, when we acquired Retra, in some instances, we had sort of reps crossing over, reps trying to sell to the same people. So we organised them that the guys in the north would serve up north, the guys in the south would serve in the south. We've also built 9,000 square foot of offices at our HQ in Buckinghamshire. So we managed to take on more hires, and we've just taken somebody on that's been helping us with the Tesco account on a part-time basis. She's going to come and work with us full-time to handle the Tesco account and any other large accounts we acquire. Next slide. Summary. Swift impact to COVID-19. We quickly formulated a plan and executed it. The next part to me is the most important part of this summary. We're profitable. We've got a strong balance sheet. We're dividend paying, cash generative, and we're no debt, but we've got no debt. And people have asked us, you seem to negotiate the pandemic very well. How did you do that? And the answer really is this is a business built on solid foundations. It's not built on sand. When the pandemic hit, a lot of companies were looking for loans, deferring their rent, defer their tax, shelve their strategy, stop with new product development. We didn't have to worry about any of this. We had to have plenty of cash in the bank. We're a strong business, and we just carried on making new products, and we carried on implementing our strategy. And I believe we've come out all the stronger for it. We had a successful launches in Tesco and Wilko. We're in active and advanced discussions with other large retailers in the UK. E-commerce revenue have significantly accelerated. We did 180,000 in 2019. We're probably looking to do 1 to 1.5 million this year. We've just launched on Amazon EU. We've got a focused strategy in place to deliver future results, and it is delivering. And we've had a positive start to 2021, despite all the disruption of Brexit and the lockdowns. Thank you. Any questions?
Thank you very much, Sam. Thank you for that. I'm sure we've got some questions. Well, we've got some coming in already. Just a reminder to those who are not familiar with the system, just click on the Q&A box at the bottom of your screen and either add a question or vote on one of the ones that you can see already on your screen. I've also got a few here that were pre-submitted, so I'll pick up on those as we go through as well, if I can see some similarities or not, or gaps in the question list. First one here to do with, and it's from Imran Khan, who apparently is a shareholder, so that's good to know. On a scale of 1 to 10, how excited should I be about USA expansion possibilities? There you go. You want to say a bit more about that one at the moment, Sam?
Well, look, we're quite excited about it. We've put a lot of things in place behind the scenes. We've taken on a couple of new hires that know some of the larger groups there. I mean, the very, very large groups, the Walgreens and these type of people, they can take 18 months to get into, and we are working towards that. But what we're trying to do at the moment is get some quick wins. As vast, there are other companies we can talk to there that have got 1,000 stores, particularly like the one I mentioned, Five Below. There are lots of companies there with 1,000 doors, 500 doors that people haven't heard of. And while we're looking at landing some of these bigger clients, we are talking to what would be regarded in the UK as major retailers. In the US are, the sort of the smaller fish, the 500, the 1,000, the 1,500 door people.
Right. Okay. In terms of your share price, apparently it fell quite a lot in mid-2018. Have you got any explanation of why that occurred at the time?
Well, as I mentioned earlier, we started 2018 very well, and as we got towards the mid half of the year, we were still doing very well, and then things sort of got very, very difficult on the high street. Later on that year, did we issue a profit warning? I can't remember.
Later on in the year, around November.
Yeah, around November, we issued a profit warning, and the share price dropped because of that. We did have a couple of rocky years, and the thing with something like cosmetics, you saw the floor stand display. It's not like putting a can of beans on a shelf. you know, to get into these retailers with 100, 150 products with this furniture takes a long time. We launched in Tesco in March 2020. We started talking to them in March 2019. That's how long it took for them to find us the space and for us to get all the products on. So when this collapse in the high street happened and we lost a lot of the tail, which was quite significant in our business, it was very, very hard to react immediately. So we did have a year of difficulty, but we're through that now, we believe. We're quite bullish.
Okay, thank you. Interesting. We've got somebody logged in from Australia where it's 2:30 in the morning. So you've got a very keen interested shareholder down there. He or she, oh, it's Angie, so it's a she, wanted to get an understanding of growth projections in South Africa, Australia, and New Zealand. And apparently she bought some of your products to test them out today. So.
Okay, well, in Australia, we've got one distributor, Chemist Warehouse. They're the biggest advertising in Australia. I think they've got 330 stores, and they support us immensely. We have Zoom calls with them, and we're growing all the time. They're giving us more space and taking more and more products. New Zealand, we're also growing, and with New Zealand, we're growing with all three brands. Body Collection, Technic, and the W7 brands are widely sold in New Zealand. South Africa, South Africa's more of a difficult market. It's deep discount. We are trying to get trials in some of the major retailers there, but it's a very slow burn.
Okay, thank you. In terms of the retailer arrangements you've got in place at the moment, would they limit your ability to move to other retailers?
We've got the only exclusivity we've got at the moment is with Tesco in the grocery trade. I mean, it doesn't apply to let's say B&M because we were already supplying them before we supplied Tesco, but we do have a deal with Tesco. As long as they continue to give us more space and roll us out, we're happy to be with them. Now, Tesco is over 30% of the grocery trade market in the UK. We feel we're with the A team. We don't feel we've scratched the surface yet. We're being given more and more space. We're being given more and more opportunity in different departments. We're now supplying them with hair accessories, eyelashes, false nails and this type of thing that are going into the main estate. We've also got sitting in front of me some of the gift that Tesco have bought for Christmas. This is like an advent calendar, 12-day advent calendar. They bought a huge amount of those. As we said, we've had significant orders. So it's not really impacting our ability in terms of if we want to go to a Boots, a Superdrug or anyone else. It's just we can't go to, if you like, Morrison's, Sainsbury's, Aldi, these type of people at the moment, but we've got enough growth for the time being with Tesco to be happy with what we're doing with them.
Okay, thank you. Just going back to your online aspirations, a question here about whether or not you're budgeting to advertise on Amazon and whether or not the subscribe and save feature excites you for the cosmetics business.
We do advertise on Amazon, and we watch that very carefully. The sales are growing. I mean, I don't run that department, but the sales are growing at the moment. We believe we get about an 11% net margin, but as the marketing spend, as the sales grow in relation to the marketing spend, we believe we can get that up to 20%.
Okay, thank you. One here on supply chain. Could you describe your key risks and contingency plans for the supply chain? And subsidiary questions to that, how many manufacturers do you depend upon for your core products? Where are they based and how important is your business to them?
We manufacture all over the world. I would have to say that probably 80% of what we produce is in China. We do use multiple factories, and right through the COVID times, we didn't have too many problems. I mean, we have got issues now with the cost of freight. It's absolutely gone through the roof. But we've spent, there's a soft dollar at the moment, which is helping us. So the margin isn't getting too eroded. And the last sort of year and a half, we spent a lot of time resourcing to get better prices. So our margin has held up through this pandemic. Yes, I don't know what issues could come down the line, but we always hold plenty of stock. So if there was an issue, we would always have time to react and go elsewhere. And we've looked at Bulgaria, we've looked at Turkey, these type of places to manufacture. I mean, I would be dishonest if I didn't say to you, we are a budget brand, so we need to make our products at the best price, and we'd love to make in the UK, and we do make some products that work for us, like nail polish, but for the most part, we do need to make in China and Taiwan and these type of places, in order to keep our prices low.
Okay, thank you. I think looking at your inventory levels, I'm guessing I can't remember the numbers exactly, but it seemed like you were running with about 3 months of stock in the system.
Yeah, and we closed the year with £15 million worth of inventory, which was down from 16.5 the year before because of a stock process we went through during COVID. And that's correct, it's about 3 or 4 months of stock at any given time. But our turnover isn't flat through the year. We have some peaks, especially in the second half and towards the Christmas season. So it's not exactly right all of the time.
And within that time frame, you are comfortable you can switch from one manufacturer to another and be up and running and restocking before you get through that 3-month period. Is that the sort of view you have?
Yeah, because for the most part, we will make sure that we've got 2 or 3 factories that can produce the same product for us. So with nail polish, I've got 4 or 5 people that will produce for us. So if we have a problem with one factory, other factories have already got it reformulated. They've got the artwork. We can just switch very, very quickly.
Okay, thank you. Question here from Mark. Should this company have women in senior positions, particularly in product development? Can you tell us about the people you have in key senior positions?
Well, all the people in our new product development department are all women. They weren't when we started this business. It was Ian and myself, but now it's all women that do our new product development. Women run our PR department. I mean, we've got a lot of women. The design department in Silsden is all managed and run by women. The PR department here is run by women. So we've got a fair amount of women in senior positions, which our chairman was very pleased about when we had to do sort of an audit of what we're doing. He was very, very pleased we were able to tick a lot of the boxes. I mean, as far as the board goes, we've only got one lady on the board. We're looking for a new non-exec. We did find a lady that we wanted, but unfortunately, she wasn't able to come on board with the way we wanted her to. She's American-based. But there's a lot of women in this business that are high up, particularly in MPD and design.
Okay, thank you. Just touching on the US again, could you, James wants to know whether you could expand a little more on the US focus and how far up your priority list is the US expansion. I think you already mentioned, he says, do you have staff on the ground in the US, but I think you already touched on that.
I mean,
are they there to help make agreements with companies to get your products into stores?
Yes, that's what they are there for. I mean, the Amazon part of that business is actually run from the UK. We've got shippers that we ship the stock from here into a holding place there in New Jersey, and that's shipped into Amazon. So that's all run from the UK. The people there on the ground, there's not many of them. Obviously, we've got a distribution warehouse, but we've got sort of a few people in the office that are salespeople, and they're looking to open doors into all the big retailers. So we're well covered there.
So just as an adjunct to that, how close do you think you are to expanding further into the Francesca stores that you mentioned earlier?
Well, we had a successful trial with them in 50 stores. We've just had a repeat order, and they're now looking at where they can give us space, because the different stores have different footprints and different configurations. So they trialed us in the 50 stores with various different options, display options. We call them CDUs, counter displays, and FSDUs, floor displays. And now they're looking at which stores they can place us in. So, I mean, we're hoping in the next couple of months there'll be some more news and more expansion. We're also on their online platform. I believe they get something like 2 million visitors a month. They've just bought some Christmas gift from us. So it is expanding.
Okay, that's good to know. And can you give us any idea as to how close you are to signing up another retailer in the US?
I don't think we can get into the narrative.
We can't.
It's worth a try. I thought you might.
You must be testing us now.
Yeah.
Okay. I appreciate that might be price sensitive information, but it's always worth asking. With the increase in the Tesco sales, what changes in debtor days and gross margins might we see coming down the tubes?
Okay, well, with Tesco, I think because they've had maybe had problems years ago, they've signed up to this GSCOP, which is the groceries code of conduct. And I have to say they've been fantastic to deal with. They've helped us grow. And in terms of payment, until you do, I think, something over £10 million with them, you get paid within 14 days. They don't take discounts. As I said earlier, we've set our margin. We know what margin we need to get. We're quite tough on that. And we've been serving them, and it's in the margin, and it's not going to affect anything going forward.
Debtor days have actually reduced as we've lost the tail that Sam was talking about earlier in 2018 as the UK high street changed. We've lost the tail of those smaller customers. We've replaced them as part of the strategy with bigger retailers, especially in the UK, and they pay quicker. So actually our debtor days are improving.
Okay, thank you. Just going back to the supply chain topic again, how do you manage the manufacturing process to ensure there are no ethical issues with the outsourced suppliers?
Well, we've got, as I said, we've got an office in Hong Kong, and we've also got offices in China, and all the factories we use are audited anyway by sort of internationally recognized companies, so Intertech and GMP, Good Manufacturing, and these type of things. So they're all audited anyway, but we also have our own people on the ground there, which we have to do because we're supplying the likes of Asda and Sainsbury and these type of people. And before the goods are shipped, we need to go along and make sure that the products are as the gold seal sample was. And they also have to sign up to anti-slavery policy and various different things. So as well as the audits that sort of the likes of Intertech do, we're doing our own audits as well to make sure that everything is as it should be.
Okay, thank you. I'm just conscious I've missed out all the ones that were pre-submitted, so I'll just briefly go through some of those. One here about cost pressures building in the supply chain. What do you expect to see coming through from your supply chain now that inflation is looming, and to what degree do you believe you can pass these costs through in your pricing, particularly with your larger customers? And I guess you already touched on the shipping costs have been escalating recently. But if you see other inflationary pressures coming through, how are you positioned in terms of price movements?
Well, we've already discussed this internally, and we're preparing a letter to send out to our customers sort of later on in the year to give them plenty of notice. I mean, I've run it by some of our salespeople, and our export director spoke to one of our biggest customers, and this guy appreciates it. He said he's getting this from everyone. There are going to be inflationary pressures. We don't know, what they will be, and how, we haven't got a crystal ball, but I do think that it's never easy going to customers asking for increased prices. There might be a quid pro quo. You know what, we need 3%, but give us 5%, we'll give you 2% back. There might be ways of working this. It's never easy, but I do think where we are at the moment, the customers do appreciate that prices are going to go up.
Okay, thank you. Couple here, again, pre-submitted ones, which are to do more with the customer and the marketing. Could you describe your most typical customer segment and what trends you are seeing within it?
I would say
by that I mean, I presume they mean the end user of the product, basically.
Yeah, I mean, our targeted demographic is sort of 18 to 35. We know it goes much wider than that. The people we're dealing with, but are looking for the on trends, the dupes, those type of things, the high fashion thing. It's much more for a younger lady, and these are the products we produce. I mean, in terms of promoting our brands, because of the demographic we've got, they're very engaged with social media. So we use a lot of social media. We use, as I said earlier, TikTok, influencers in general, Instagram to promote the brand. So, it's really, for the most part, a younger demographic and very, very fashion focused.
Okay, thank you. Couple of financial related ones here. The gross margin has declined from over 40% a few years ago to around 30% last year. What are the main causes of this, and where would you expect it to be on average for your type of business in the longer term?
Okay, well, when we first came to the market, I'll answer this.
Yeah.
The margin was up towards 40%, and it was only the W7 business that we made some acquisitions of our retro business up in Leeds. They are primarily, at the time, a gift-only business with some very little everyday makeup being sold, and gift is a lower margin. Sam in particular has changed that business model to be more everyday, and the gift is not so prominent there. Also at the time when we floated, the dollar was much softer, and then it went through a very, very strong period of coming down to 120s, 118s we've had, which has affected things as well. So there's been a lot of history in that margin. And more recently, our margin actually in 2020 was very similar to 2019, around 33.5%. It's just because of COVID, the narrative was cash is king, and we decided to place an amount of stock, some slower moving lines, some older lines, some items that were getting a desired margin. We moved them through during 2020 to get cash on the balance sheet. Not that we needed it, but it seemed to be the message from brokers and advisors. So there's been a lot of history changing that margin. We have announced recently, I think at the end of Q1, that our product margin had actually improved, which is what's happening now. We're very conscious of margin. It's a primary driver for an entrepreneurial founder like Sammy. So, we're on it, and it should improve as time goes by. But some of the levers involved are the dollar, freight rates, the amount we buy, where we're buying from, that can affect the margin, and then what we're selling for as well.
Right. So you think we may have hit a low point, and it's going to come back up towards that 40% over time?
Yeah. I mean, one of the reasons is we bought the American subsidiary. They were primarily half closeout and half own brand, selling our brand, W7.
Yeah.
There is now very little closeout, if any, is being sold in America. It's focused only on selling the group brands. Group brands sell at a good margin. Closeout sells at a much lower margin.
Yeah.
So during 2020 and the back end of 19, when we were refocusing that business in America wasn't driving any margin growth. It was actually hitting the margin, even though we were getting some turnover. So we've changed the business quite a lot in the last 24 months, and that will come through as time progresses.
Okay, thank you. And another financial one here. In terms of SG&A, that's increased roughly from 20% of sales a few years ago to 35% of sales more recently. So again, a swing, quite an increase there in terms of SG&A. What are the main drivers for that? And again, the question is where would you expect it to average out at in the longer term?
All right, okay. I think one of the things that's affected that area is we've made acquisitions, so we've got lots more amortization, and you've also got IFRS 16, which is affecting depreciation and interest costs, and below the normal admin line where those costs would be in rent. So it's just disproportionately making the SGA number larger than it should be compared to what it was. But most of our costs are fixed. Our biggest cost is wages and salaries by far within the business, and it's quite an easy model really. We manufacture, we make a good margin, and we've got a fixed cost base. So the profits fall through to the bottom line. It's not that SGA has changed much. Okay,
so we should expect it going forward to be you get some operational leverage out of that as the top line starts to move. Okay.
Yes, definitely. Yeah.
Okay.
Yeah.
Thank you.
Yeah.
Thank you. Just going back to the screen here, Angie in Australia is still up and awake and wants to ask some fairly detailed questions actually about the market down there. Does Chemist Warehouse have an exclusive arrangement in Australia? And can you tell us about sales in Asia as well?
They do have an exclusive arrangement in Australia. We're very happy to work with them. I think in Australia, for us being such a small market, we're happy to find one retailer, to work with. So we work with them, and they, as I said earlier, they give us lots of space. So there's not really a desire to sort of leave them and cancel that arrangement. They're a very, very good customer of ours. With regard to Asia, that has dropped off in the last sort of year or so. There's been some big issues with COVID. We have got distributors in Korea, and it was growing nicely. We've got distributors in Japan, but I have to say, in the last year with the onset of COVID, sales have dropped off. We're hoping to pick that up again. As I mentioned, China, we're going to have our own sort of Amazon type model.
Okay, thank you. Angie's probing here about what payment terms with Amazon and Chemist Warehouse. What are the payment terms with Amazon and Chemist Warehouse, etc.? I don't know what you can share with us there, but
they're not unusual terms; they're just normal terms.
We've got very, very good terms with Chemist Warehouse. I don't think it'd be fair for me to put that out in the open. That's not, because I don't know what terms. We might be getting a lot more favourable terms than other people, but we got very, very favourable terms. As far as Amazon goes, they take the money, they take their commission, and we get paid on a regular basis. We're not supplying Amazon. It's being supplied on consignment, so we're not waiting for payment from them. We get paid as the consumer buys the product.
Right. Thank you. One here, probably for you, Sam. You and your co-founder, Ian McLeod, still control around 25% each of the company.
Yeah.
Whilst it's good to see key executives with plenty of skin in the game, I believe most investors consider such a high percentage to be a warning sign. Do you have any plans to rectify this position?
Not at the moment. I mean, you know what? There's two arguments to that story. You know, we've got a lot of exactly what you said, a lot of skin in the game. So, you know, we've got every desire for this company to do well. And you know, Ian and I are not silly enough, not to play by the rules. First of all, we've got a board that our chairman is very, very hot on governance. We always behave in the right way, and he's not going to allow us to do anything that would put the company in jeopardy. And from our point of view, we're not going to do anything. You know, the only people that are going to get hurt is us, you know, if the share price tanks. So at this moment in time, we're not looking to sell down, no.
Okay, thank you.
I was just going to say, when we go to investors, most of them actually quite like that they've got skin in the game. The two founders. There's a mixed bag of opinion, I think.
Yeah, I agree with that. I think generally speaking, it's my impression from this is just speaking from the discussions I have occasionally with ShareSoc members is they like to see somewhere in the 10 to 15% area, because that gives executives enough interest to want to make the company really move forward and align with the shareholders, but it doesn't give them so much control that they can do what the hell they like and, you know, ignore the rest of the shareholder base. So it's always a difficult balance, isn't it? So anyway, that's just a kind of view I kind of get a feeling for in the retail investor world. Just on there's a subsidiary question I've just noticed on the list here from the ones that were submitted earlier. You presently have 7 board members, of which only 2 could be described as independent in the true sense of that word. And again, this isn't in line with guidance on good corporate governance. It could be perceived as a weakness by the investing community. What can you say to reassure investors that the board has the best interests of the company and all the shareholders as its prime focus?
Well, first of all, we are interviewing at the moment for a new non-exec to balance the board up. I think it's too independent. I think is a bit of a stretch. I mean, we took on a company called Ward Hagen to help us get into the likes of Tesco. A lot of experience in this area, and Paul Hagen was on our board, and our chairman said, you know, he really feels that he needs to become, you know, he's got to become an exec. He's not actually employed by the company, but so to all intents and purposes, he really is independent, and he does challenge us. I mean, you have to look at how we behave as a board. And as I said earlier, we've got a lot of skin in the game. We're not going to do anything reckless.
I would just add to that, if you look at our interims and our full accounts that we produce, we go overboard on lots of content and information, much more so than a lot of other AIM companies, because the chairman takes governance very, very seriously, and we believe we should inform the shareholders with as much detail as possible on the key decisions of running the business and how we run the business.
Okay, thanks for that, Neil. One final question for Angie. She also says that she's now off to bed, so I don't know whether she's still awake enough to listen to the answer, but how do you find the influencers you use in social media terms? Do you use an agency, or is it some other method that you use?
We do a mixture. So we do use agencies, but what happens is as well, influencers go out and they buy our products, and they'll go online and go and buy them off their own back, and they'll go online and they'll do demonstrations. And if we like them and it gets traction, we will reach out to them. So it really is, you know, a combination of how we do these things. So it's through agencies and finding them also ourselves.
Okay, how important, just as a matter of interest, I'm not that familiar with how heavily they influence sales these days. How important are influencers in social media to your product growth?
I mean, if you go back a few years, it was sort of all these Love Islanders and quasi celebrities that and that got sales and it got sort of brand recognition. Now I really feel the influencers now have to be believable. They really need to be more the girl next door rather than someone that's famous, because what you're finding is a lot of the influencers out there that are on Love Island and these kind of reality shows. You know, one day they're selling soft drinks, the next day they're selling cosmetics, the day after it's clothes. So you really want sort of a cosmetic influencer that is believed and trusted, and that's really, we do a mixture, but that's really where we focus.
Okay, all right. Well, thank you for that. We're all out of questions, and we're just about all out of time. So that's perfect. Perfect webinar. It doesn't always happen. So Sam, Neil, thank you very much for your time, and good luck with growing the business and you know, keeping the product moving forward. I've particularly found it fascinating because I don't know a lot about this area of the market, as you can imagine. And you also win the award, I think, for the most colourful webinar we've had to date. So thank you for that. We'd love to get you back at some point in the future when you've got more news and more updates. So in the meantime, for now, good evening and enjoy the rest of your day. Thanks.
Thank you.
Thank you. Thanks for listening.